Let's talk about answers. Does momentum trading actually work? I mean, we've all had great momentum trades and we've all lost on momentum trades, but empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? If momentum trading has worked in the past, these answers should be empirical and absolutely explicit. Also, how about technical analysis or technical trading? Does it really work? It's all over social media and fintech news, and if it really does work, okay then. Which indicator has worked the best historically, on which stocks, at what times, when has been the best time to exit? Again, what are realistic average returns? What are historical win rates? If technical trading, just like momentum, has worked in the past, then these answers should be empirical and absolutely explicit. And what about non-directional option trading? Has there been a way to profit from this low volatility world, this low VIX world, without making a directional bet? Without betting on a bull market continuing? Or even more abrupt if we go into a bear market or a correction? Again, empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? Answers. That's what this is about. We're going to cover all of this and we're going to do it pretty quickly. We'll start with momentum, then technical analysis combined with momentum, then non-directional history. All right, let's go. We're going to start with momentum. We'll start with our first pre-earnings pattern. I call this a directional bet on optimism. So one of the least recognized but most important phenomena surrounding this bull market is the amount of optimism that sets in the 2 weeks before earnings in the mega technology stocks. We're talking the FANG stocks. Now this is totally irrespective of whether the stocks have a history of beating earnings. In fact, many of them don't. But in the 2 weeks before earnings, there is a massive momentum rally into the event. What the scanner will help us see later is that while there is this 2-week pattern, sometimes 1 week or even just 3 days presents a better trading window, both with respect to consistency of the win rate and of course total returns. We'll start with 2 weeks here and address the other time periods when we cover the scanner. Let's look at a simple idea. Let's just buy a monthly call option in Alphabet 2 weeks before earnings and selling the call before the earnings announcement. So we'll get long a call, we'll go to custom earnings handling, we'll open the trade 14 days before earnings, and we will close the trade 1 day before earnings. We are not taking an earnings bet. This is a pre-earnings trade. And here are the results. We can see across the board, this has been a winner. And just to see what's happening, we can look at the stock price. This is a 2-year stock chart of Alphabet, where the blue E icons represent the earnings. What's so interesting here is that while the stock almost always rallies before earnings, you can see that with these little yellow arrows into the earnings, the stock goes down off of earnings a lot. In fact, that's what these yellow rectangles are. This is how many times Alphabet missed earnings. It's just a coin flip, but it never interferes with this optimism, this bullish momentum. While we're looking at this, we might as well look at the rest of FANG. So I'm just going to put the rest of the tickers in here, comma delimited. As I said, this works with all of the mega tech stocks, but what we need to do to find the best trades is to focus on the win rates. Netflix and Amazon are a coin flip. Even though the returns are positive, these aren't the best of breed. But a good trade turns into a great trade only after we do risk control. So let's drop a tight stop on these calls and also a tight limit. We'll go down to the close trade when section. We will close these long calls if they go up by 30% in a 2-week period. And we'll also close them if they go down by 30% in a 2-week period. All of a sudden, the trade is clearly in Alphabet and Facebook, not Apple, Netflix, or Amazon. So let's focus on those two. Now we can see the staggering returns, and we can see 15 wins on 1 loss if we held these 2 as a portfolio. And just so you know we're not pulling a fast one on you, and that calls always work on these companies, we can just look at the 15 days after earnings. So we'll open 1 day after earnings and close 15 days after earnings. And these trades are actually negative. So this is in fact a pre-earnings momentum trade based on the personality of this bull market. While we're here, let's go ahead and look at another trade that's very similar. We'll go to custom earnings, and this time we're going to look to open the trade just 1 week before earnings, so 7 days before earnings and closing it the day before, as opposed to the 2 weeks before earnings trades we looked at with Google and Facebook. And this time we'll look at NVIDIA. So we're going to buy a call 7 days before earnings, close it the day before earnings, we'll put a stop and a limit, and we'll look at the last 3 years. And here we can see with NVIDIA, 11 wins and 1 loss with a 1,352 total return. And if you're wondering how I knew to look at NVIDIA a week before earnings, this is how. We're going to introduce the Pro Scanner, which is available to Trade Machine Pro members. We select Pro Scan, then we select By Strategy. We can choose any grouping of stocks, but for now, we'll use the S&P 500. Since we're looking at pre-earnings momentum trades, we're going to scroll down to the pre-earnings section. You'll note that we scan for 14-day, 7-day, and 3-day pre-earnings momentum trades. We'll select the 14-day since that's what we're looking at with Google. The scanner automatically sorts the results by win rate. And since the 14-day scan does not use a stop or limit, the highest win rate in this group of tickers is actually the tech gem Akamai, with 10 wins out of the last 11 earning sessions for a 91% win rate. We can see a 38% average return per trade, and that includes the one loss. That's over 38% for just 14 days. The total backtest return is 426%. Finally, we can see Google, and here are the results before we put in the stop or the limit. We can also sort our results by the total backtest return. So this is for the trader that's comfortable with a backtest that has shown a lower win rate but larger returns. Let's now look at the 1 week backtests and just look at the 3-year results. So we'll tap on 7 days and we'll deactivate the other buttons. We can see NVIDIA here. This is a tech darling that has had immense pre-earnings momentum, showing 11 wins out of the last 12 pre-earnings sessions, with an average return of 39% in a week or 493%. For those of us that like trading the tech names, we can select the NASDAQ 100 and sharpen our scan results. We can find a familiar name as well, which is Microsoft at the top of the list, which has won for 3 years in a row the 1 week before earnings, showing an average trade return of 50% per week. Microsoft is one of those curiously forgotten tech names. Let's let the rest of the world forget about Microsoft. We will not. Now this 7-day pre-earnings backtest and the 3-day earnings backtest, which is really just a tight swing trade, do in fact implement a stop and limit of 40%. This is our first exposure to the Trade Machine Pro scanner, and all we have done so far is just look at a very small subset of another subset, which are pre-earnings scans, the momentum patterns. But this leads us to one of the other benefits of the Pro scanner. We can simply click on a ticker and it will load the backtest in our Trade Machine for us. So let's click on Microsoft, and here are our Microsoft results. 12 wins, no losses. And down here is where the limit gain and the stop loss have already been implemented. We can click on custom strategies and we'll see we are looking at, in fact, this 1 week trade. So we finished step 1. We found answers for momentum trading. Yes, it does work. The trade entry can be 3 days, 7 days, maybe even 14 days before earnings. The scanner shows us which securities have worked the best in the past. It shows us when to exit using the stop loss and the limit gain. It shows us what the historical returns are. It shows us what the historical win rates are. So has momentum trading worked? Yes, it has. Now let's turn to technical trading. While there are hundreds, if not thousands, of technical indicators, in the Trade Machine we focus on very few. Right now we're going to focus on what has been called the TTM squeeze, first discovered by famed trader John Carter. This signal is actually a combination of 3 technical indicators to make a single signal, and that signal can either be bullish or it can be bearish. Now, it's always important to understand precisely what a trade is doing. So to understand this signal, we have written a full-blown dossier with the videos linking back to John Carter's discovery several years ago. You get to the dossiers by going to the Discover tab, and then looking under FAQ, you can go to Technicals and the TTM Squeeze, and when you tap on that link, you get a full-blown explanation of how this works. So not to run too long, we're going to skip a description, but remember, the details are available through the Discover tab, and there is never an excuse to trade without understanding the facility behind it. And while this might sound complex as we've introduced it, like most technical trading, it really isn't. It's very clever, it's very useful, and it's also very easy to understand. So now we will look at technical trading with options, and we won't pay attention to earnings at all. That is, we are looking at technical momentum as opposed to pre-earnings patterned momentum. The idea behind the squeeze is that for the vast majority of the time, stocks tend to move pretty quietly sideways. Then they move abruptly either up or down, and we're not talking about those big earnings moves. That is, we're here to answer the question we posed at the top of this video. Does technical analysis work? Here we go. We'll stick with Microsoft. We'll get long a call. We will do nothing special with earnings, and we will tap on the bull squeeze. We'll go to our settings, and we're actually going to set the start date to 5 years ago. So we're going to get 5 years of data. And here are the results. Before we even look at them, let's tap on the backtest tile to see all of the trades. You can download all of this data into Excel. And if we do that, we can see how infrequent the signal is. It turns out that over this 5-year period, which is 1,824 days, the trigger was live for only 218 days, or 12% of the time. This just gives us a great feel for what this signal looks for and the unusual periods when a stock is making an abrupt move. Now let's look at the results. We can see 18 wins and 4 losses for nearly an 82% win rate with a 664% return. It turns out that the average trade time for this in Microsoft was just 10 days. Let's just look at another FANG stock. We'll type in Facebook. Here with Facebook, we see 16 wins on 4 losses, or an 80% win rate, and another staggeringly large return. But here's the real power, or really, the piece of data that makes this technical signal so powerful. We've been in an historic bull market for more than 5 years, so it makes sense that the signal would work during a bull market. But it should also help identify the times when being short the market, or with options, owning puts has actually worked. And we don't even have to get fancy with it. Let's just look at the Dow Jones Industrial Average through its ETF, DIA. So we'll type in DIA and we'll look at a bear's squeeze and buying puts. Now we can see the results of buying this puts with the bear's squeeze while in the middle of a raging bull market. We see a 332% return on 10 wins and 1 loss. And if we tap on the backtest tile, we can see that the average return is 29%. Now this isn't a silver bullet. When the trade lost, it lost more than 17%. But this shows the power of this technical indicator. Even in the midst of a bull market, there are periods where getting short the market through getting long puts has been an enormous winner. So that's it. We wanted answers to these questions. Does technical trading actually work? What is the signal for trade entry? It's either the bull squeeze or the bear squeeze. And where do we find discovery of the companies or ETFs where this has worked the best in the past? As always, it goes back to the Pro Scanner. And now we have completed step 2. We have with great specificity questioned, tested, and discovered the results of patterned pre-earnings momentum and technical momentum irrespective of earnings. Our final task now is to answer, what about non-directional option trading? And here we go. It's long been believed and proven that simply owning an at-the-money straddle in most stocks is a loser. In fact, we can do it with our backtester looking at Google. Here it is, getting long a straddle, doing nothing with earnings over the last 3 years, buying the 30-day option. This trade has only a 41% win rate and is down 57% over the last 3 years. But we started this discussion with a question, which is, what about non-directional option trading? Is there a way to profit from it without betting on a bull market continuing, or even more abruptly, even if we go into a bear market or correction? And we want empirical results. Does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? Since we see normally owning a straddle in Google has been a loser, let's try something different. We'll come down to custom earnings. And now we'll look at opening the trade 1 day after earnings and closing it the week after earnings. That is, it's a 1-week trade right after earnings. So the stock does its gymnastics after earnings, we wait a full day, then we buy a straddle with the 30-day options. And here are those results. Over the last 11 earning periods, it has won 9 times and only lost twice, with a 263% total return. Remember, when we did this without using custom earnings dating, it was a 57.5% loser. We can find dozens, if not hundreds of these opportunities where owning volatility looks like a loser and the market believes it to be a loser. But timing it correctly around earnings has proven to be a gigantic winner. And the answer, of course, whether it's before earnings or after earnings, is in the Pro Scanner. So we go back to the Pro Scanner, we go by strategy, we pick our ticker group. In this case, we'll just look at the S&P 500. We have the 7 days post-earnings long straddle, which we looked at with Google. Or if we prefer, we can look at 7 days pre-earnings or even 14 days pre-earnings. So these 3 scans find us the companies where owning volatility, even in this low VIX world, has been a winner. So we can answer empirically. It does work. We do know the best trade entry, we do know which stocks have worked the best, and we do know the best time to exit by using our stops and limits. We started this discussion saying we wanted answers to 3 questions. Has momentum trading actually worked? Has technical analysis actually worked? Has non-directional option trading actually worked? And if so, we should have empirical and explicit answers for each of those. We've answered our questions, and we have been empirical, and we have been explicit. There are other questions that the trade machine can answer, like, has non-directional option trading while selling options worked? And if so, when? And in which securities? And what are the historical win rates? The trade machine was built to answer questions for traders. It was built to be empirical. It was built to be explicit. And of course, It was built to be easy to use. There's so much more the scanner has, including custom portfolio building. But for now, we have succeeded in our goal. We have answered our questions, and we hope you are a more powerful trader for watching. Thank you for your time. Now, of course, we just focused on earnings-related trades. If you like trading the actual event, we have a button for that. You can just click Only Trade Earnings and test any strategy you want, whether it be custom or pre-built, during the earnings event. And of course, for all other times, you can always just select Never Trade Earnings, and you can do the same thing. You can create your own custom strategy or pre-built strategies. And finally, it bears repeating, while we just looked at the FANG stocks, we cover every stock and every ETF and every index in North America as well. The opportunities are there. You just need to find them. So this is it. This is how people profit from the option market. It's preparation, not luck. Thanks for watching. All right. That guy who did that video was pretty passionate. All right. So I'm going to go a little further now. But first I have to do a little bit of a disclaimer. So here I go. Just a reminder as to the video that we just played. The prices and other statistics on the video were hypothetical and do not reflect the impact, if any, of certain market factors such as liquidity and slippage. Also, CML is not a trade advisory service. Awesome. Okay, before I dig deeper into the scanner, I wanted to give everyone a little opportunity. Trade Machine Pro, which is what you just saw, is normally $99 a month. All right, but we have a promotion right now where it's $69 a month through the link CMLviz.com. That's a TOI. So Tom Ophir Igloo, TOI. So if you go here, you can sign up and get it for a 30% discount, and you will keep that price for life or until you cancel. We go to month, so you don't have to sign a contract. And if you don't like it after a couple of weeks, just tell us, we just refund the money. We'd have no interest in taking a subscription from someone who isn't benefiting from their trading. All right, so that's out of the way. All right, one more disclaimer. The bull and bear squeezes, so the technical analysis that we discussed in the video, are coming to the product by the end of this month. So let's say within, 10 to 13 days. So if you sign up now and you start looking for this, and I say, hey, where is it? You're right, it's not there. It's coming in about 10 days. And that's when the price goes from $99 to actually $129. So you'll end up with a 50% discount. Okay. Now, I just want to dive a little deeper into the Pro Scanner. So just to give you a feeling for how the Trade Machine works, there's just 3 tabs. There's the Backtest tab, and that's where we do things like, how has Apple done if you bought a call. Then there's the Pro Scanner, which we're going to talk about right now. And then there's the Discover tab, which has all of the help videos, and 3 times a week we write up a dossier about back tests that are relevant that we find to be very interesting. Let's go back to the Pro Scanner. We went pretty quickly, so I'm just going to show you some of the usage with a little bit more methodology. So you start by choosing a ticker group. So let's just say the NASDAQ 100 for those of us that like to trade the tech-heavy names. Then you choose a strategy. In about 10 days, under Never Trade Earnings, you will see the bull squeeze and the bear squeeze. So you will see the technical back tests here. Okay. There's also only during earnings trades. In this case, we actually scan for the exceptionally risky, but for those who like it, buying strangles or straddles into earnings. Then we have our post-earnings trades. We looked at that with Google. Remember, we look at that 1 week straddle after earnings. That's this one. We also have 1 month short put spreads. And also we mentioned, you can also take a non-directional bet while selling volatility, and that's with iron condors. And I'll just go ahead and show that result. You can see there are some companies, for example, Facebook, where this has been an exceptionally good trade in the past. So these are in 3 years, you're seeing like 1 loss or no losses with high trade returns. All right. Then there's also the pre-earnings trades. The trades that we talked about pre-earnings were the 7-day pre-earnings call, the 14-day pre-earnings call, but we also have a 3-day pre-earnings call. These are just momentum trades. It's a fancy way of saying momentum. So different timing for momentum. And if you want to look at the 3-day calls, you can see, for example, how well Netflix has done 3 days before earnings. So how many of you would have liked to have known that about 5 days ago? We also have the non-directional bets. So this is a 7-day pre-earnings straddle. Again, this does not take risk of earnings. All of these trades close before earnings. We're not taking earnings bets. And then there's the 14-day. And while the scanner is exceptionally helpful going by strategy, it also has a nice feature, which is a custom portfolio. So everything we've done is by strategy. You can also go by ticker. And what you can do here is you can just enter a group of tickers, comma delimited. You can enter up to 100. And you can just look at the strategies that have worked for those tickers. So just for our purposes, I'm going to put in the FANG stocks, FANG with double A and double N. So it will be Apple, actually let's do it in order because I'll forget. Facebook, Apple, Amazon, Netflix, NVIDIA, and Google, right? FAANNG. Okay, great. And then click outside the box and it loads all of the back tests. And you can sort them by the win rates if you prefer, right? So you can see the ones that have won the most often. So it looks like the 3-day pre-earnings momentum in Netflix has won great. The 14-day pre-earnings momentum in Amazon. But you can also sort it by strategy. And the reason this is interesting is what you really want to do is not have, 100 bets in a row on bullish momentum, or for that matter, 100 bets in a row on bearish momentum. It's good to have a diversified portfolio of option trades. So if you're going to make a bullish momentum bet, then make a bearish momentum bet. And if you're going to make a bet that's directional, then make a bet that is non-directional. And if you're only interested in certain stocks, you can do that in this part of the scanner by ticker. And as I said, you can enter up to 100 tickers. I've just decided to do 6 right here. But it's really the understanding of when momentum works, when technicals work, when non-directional trades work, when selling options for non-directional trades work, and finding all of those and combining them in a portfolio of trades. So maybe you're holding 5, 6, 7, 10 options trades at once, where the movement of the market isn't going to blow up your entire position. And this is how professional option traders make money. All right, so that completes my discussion of the Pro Scanner. We went over the backtester quickly, but I think that we've seen enough. If you want more, just another quick reminder. You can get all of CML Trade Machine Pro for $69 a month. Let me strike through. Hold on, as I go ever so slowly. All right, it's $69 a month. This price is guaranteed for life. As of November 1st, this will actually be $129 a month when we add the technical indicators. So this will be essentially 50% off. And I want everyone to feel comfortable to know that if you try it and you just don't like it, yeah, just tell us and we're going to refund your money. We have no problem with that at all. So that's how you sign up. And then I'll now go a little bit deeper into the Discover tab. So 3 times a week, we write dossiers on back tests that are relevant. So for example, that Google options trade after earnings, we actually wrote about that right here on the 10th of October. So you can actually tap on that. And it will show you exactly what we were talking about, how Google has won over the last 2 years with that 1 week after earnings straddle. We also did tell our users, of course, about Netflix and Microsoft and what's coming up with Baidu and NVIDIA. In fact, we just posted an article today about NVIDIA, and I called it the earnings option trade at NVIDIA that nobody's talking about, which means that it's not a momentum trade, it's something else. We also have under our frequently asked questions a full user's manual, which is a video. Nobody's going to want to read a PDF, right? It's a video which shows you how to use the trade machine. And even though it looks super easy to use, and it is super easy to use, when you become a member, just watch this 10-minute video. It's just going to save you so much time. It shows you how to enter the proper commission, so your own commission schedule, and learn about things like slippage and liquidity and how to do custom settings and how to even speak with support by sending back tests. So it's great to watch the user's manual. We also have an entire manual on the Pro Scanner, although if you've been on this webinar, you probably understand the scanner, and that what you don't understand you can figure out by clicking around. Okay, so that concludes my presentation and the movie. And now I think I'll move to any Q&A. Jay, I don't know if there is any to answer.
Yeah, there's a question from Kenneth. He says, some feel backwardation or contango metrics are key to VIX derivatives. Do you agree, and how do you include that in a short VXX trade?
Okay, yes. So contango is actually a market construct which I think we could relate to normalcy. So the idea of contango, for those that don't know, actually know it, we wrote a dossier on the VXX about contango, and it's just much easier to show in a picture. So I'm going to do that. Hold on one second. VXX is a great trade to know, even if you guys don't subscribe. It's just been a cash machine. All right, so the the VIX is priced in futures. So you can't, when you see the VIX on Yahoo Finance or CNBC, you can't actually buy that VIX. There's no trading of that VIX. It's just a number. The tradable VIX is in futures. And you can see this is a snapshot from a little while ago. There was futures in the week of August 23rd, August 30th, September 6th, and so on. But what you can see is that the price of VIX, as you go further and further into the future, is higher, right? So each one is higher than the last. This is called contango, in which each period is higher than the previous. This is a normal market construct. That doesn't mean that the market is always in contango, but it is normal. And when the market goes out of contango, it tends to come back. And it does so through a vehicle. That vehicle is called the VXX. And this is one of the greatest option trades probably in the history of financial markets. The VXX makes money as long as the VIX is in contango. And when the VIX goes out of contango, it loses money. This is a real chart of the VXX. This isn't made up. This is from Yahoo Finance. The VXX has been around for 8 years, and it is down more than 99.9%. It is down 99.97%. This is 99.96. It's now 99.7% since inception. And as it says here, the reason is that the VIX is almost always in contango. And you can benefit from this. The VXX has options. And so, for example, buying put spreads in VXX has been remarkably good, or just buying straight down the middle puts. The question is, when the VXX spikes, because VIX goes out of contango, how do you manage the trades to make sure you're not buying it right here and you get blown out? And that's what we talk about. So to answer the question about contango, this is what contango is. VXX is indeed priced on contango. That is, if there is contango, VXX goes down. And if there is, the opposite of contango is backwardation. And if there is backwardation, VXX goes up. But it's something to note that unlike a bull market or a bear market or a company that's just ripping on momentum, contango actually is the normal construct of a market. And we discussed that in other ways in our other products. But that's how the market is supposed to work. So the price of corn in 7 months should be more expensive than the price of corn today, right? So corn can also be in contango. Oil can also be in contango. All right. Any other questions?
Yeah, Dormesh asks, can you do a screen using the bull squeeze?
Okay, great question. So the question is, on the scanner, by strategy, where's the bull squeeze? So when we add the bull squeeze and the bear squeeze, we will also add the scans for it, and it'll be down here. Where it says never trade earnings, you will all of a sudden see two more buttons. One will say bull squeeze, and one will say bear squeeze. So when we release the technicals, which is in the next couple of weeks, we will also release the scans for it. And even better, in the scans, when you see the results, let me just get some results for some scans, any scans. In this final column, we will note if a stock is in a squeeze or not, and you'll be able to sort by it to find stocks that are in squeezes. That is, they're actively in technical trading. Shortly after that, we're going to enable alerts. So both, definitely email alerts, hopefully email and text alerts. So you can say, hey, I want to know the next time NVIDIA is in a squeeze, and we'll send an alert. But that's going to take a couple months to build. But in the meantime, in the scanner, you will be able to find the bullish and bearish squeezes when they're happening by sorting by the final column. So that was a really, really long answer to, it's coming at the same time that the technicals are coming to the product.
Great. Charles asks, and I can answer this one for Charles. Do you wait for the squeeze to fire first, positive or negative? So it's currently in development, and we're doing a few things to tweak it. But the way it works right now is that once it enters a squeeze, it has to be in a squeeze for 3 days, and then if the momentum moves in a positive direction, that would trigger what we call the bull squeeze. And if it moves in a negative direction, then that would trigger the bear squeeze. So if you have the bull squeeze selected, it would only trade the positive upward motion and vice versa. We should also mention about that promotion that generally lasts about 48 hours. So that won't last forever. So if you want to take advantage of that, then we recommend that you jump on that. And again, as Ophir mentioned, towards the end of the month, not only will the promotion go away, but the price will go from $99 a month to $129 a month. And for all of our existing members, they can just sit back and smile because the price is going to stay, their price is locked in forever. So that's one of the advantages of joining our community, as well as, our community is really who we listen to for all the features that come into the product. So if you're thinking about it, then don't wait too long.
Yeah. Also,
we have another question.
Sorry, Jake, go ahead.
No, go ahead, Ophir.
I was going to say also, guys, we only profit if our tools are profitable for traders. So if you get on the trade machine, you're like, pass. We just send you a refund. It's really not that big of a deal. We're not going to say, you're on for longer than 15 days. You owe us money. It doesn't work like that. You could cancel on day 29 and we send it back to you. Our cancellation rate is extremely low. And so if someone for some reason doesn't like the tools, then it's our pleasure to send a refund.
We have another question from Kenneth. He says, what momentum indicator do you use to determine a bull versus bear squeeze? So there's going to be two different options when we release it in the product. One is going to be stacked moving averages, and the other one is pretty much an out-of-the-box momentum indicator, and we'll give a few more details on that in the Learn More section of the Open Trade When that you can see below the bear squeeze button on that screen. So that has a bunch of information now, but we're going to continue filling out all of that stuff with every question that we can think of.
Yep. For now, what you saw and what will be here is a 12-day momentum oscillator. Just to answer the question right now. We will also use exponential moving averages and whether or not the stock price is above the 8-day, whatever. We'll describe all of it. But for now, we're using the 12-day momentum oscillator.
We have another really good question from Sunil. This is good for everyone to pay attention to. So Sunil asks, once we lock the price in, if I quit for a month and come back, will I have the same price again? And the answer to that is definitely no. And we have a lot of people who do that. We actually, there was a sort of a market insight that came up on, I think it was the Netflix trade or something, but it had a down day, a bunch of people quit, and then the trade started doing really well and everyone wanted to be back in. So the price is only locked in for as long as you stay a member. So, definitely don't cancel if you are kind of on the fence, because the price is going to keep going up. We fully expect the price to be north of $200 a month in the next 6 or 12 months.
Right. And by the way, the reason the price keeps going up is because we want to reward some of the early adopters. So the first few thousand members we have are getting really good prices, right? They're at $69, but as it gets larger, we're going to start raising the price as we start adding more and more features. And it's already pretty rich feature set, but it's going to get richer. So just good.
Yeah, it's, as we add more features, we add more servers, we add more data sets, we have, we pay our data vendors, all that sort of thing. So our commitment is, even if our costs go up, to not raise the price on our users. But yeah, just things will continue to raise over time.
Cool. Any more questions?
Yes, we have Michael. Oh, did you mention that this also covers Canadian stocks and options? If so, how do you account for the low-no volume for Canadian options?
Yes, so we do have Canadian options. Here's Shopify, for example, which I'm sure everybody's well aware of. The way you account for low liquidity in options is actually described in the user's manual, but I'll just show you right here. I'm going to actually not use Shopify. I'm going to use, I'll use Shopify. I'm not sure how wide their markets is. I'm trying to look for just a terrible company, but underneath the settings, oh boy, let me go back to production. Sorry. 1 second. Let me type in Shopify buying a call. So everything in the back tester is driven by this little settings gear, right? So in here, you put all your stuff. You put in your commissions and your custom deltas. And if you don't know what that is, don't worry, we tell you. But one of the great things is your execution fill type. And so a great way to tell if markets are too wide is to go from mid-market. Here, I'm going to make this really, really clear by just showing one back test box. Okay. Whatever, I don't even know what I'm testing. Long colon Shopify. Now look what happens if we go, instead of mid-market prices, to halfway in between mid-market and market. So that is, how liquid are these options? So it went from 476 to 411. So Shopify has really liquid options. But I can show you some other examples of companies where especially some ETFs where they're just completely untradeable. And the way you can tell if slippage or liquidity is going to be a problem is just toggle back and forth between these. When you use any of the large tech stocks, for example, you'll know almost no difference whatsoever. Yet when you use some of the things that have no liquidity, you're going to notice a large difference. So that's how we account for liquidity and slippage. It's in fact up to you in the settings, and we explicitly let you test it.
We have a question. Will there be a CML initial coin offering? The answer is definitely yes. That's already on the way. You can pay in CML bits, which is the coin offering. Just kidding. No coin offering.
There is no ICO. Sorry about that. But I do have strong opinions on Bitcoin, Ether, and Ripple, so you can ask me on Twitter.
And if they ever get listed anywhere, we'll definitely have market insights articles on them, because Ophir is actually, really knows his stuff on those things. So we have a few more questions coming in. I see. I opened the BA 7-day long pre-earnings trade. Looking forward to Microsoft 7-day pre-earnings call. Like it, and look forward to new features. Thanks. Yeah, we're excited too, and we oftentimes get in there with you, so we're excited for these things as well. He says, good discussion on the settings mid-market. Is there a video documentation on that?
Yes, there is. Go to the Discover tab, go to Frequently Asked Questions, and go to Execution Fill Type. And all of a sudden, we'll have a movie which says everything that I just said. So if you have a question, it's almost always here in the Discover. So excellent question, and we have an answer.
Mary asks, so if I never traded before, can I use this platform to trade, or is it just stats? And how does the commissions work? Do you want to take that one, Ophir?
Sure. So I think that the best way to enter trading is to paper trade first. So I think this is a great platform for that. So paper trading is just a fancy financial jargon way of saying writing down your trades on a piece of paper, or in realistic terms in Excel, and pretending you made the trade and see what would have happened. So it's a good way to interact with the market without using risk capital. And so in that sense, yes, I think this is one of the best platforms I've ever seen to enable someone to paper trade, because oftentimes when you're paper trading, you don't even know where to start. What would you hypothetically even do? How can you paper trade? This will definitely tell you what to paper trade. And then you can test it and see what would have happened in your account. And I think most of the major brokerages actually allow you to paper trade as though you are trading, and you can see a profit and loss in your brokerage account, even though it's not real. So I would say this is a phenomenal tool for paper trading for someone who's never traded before. You graduate from paper trading to real trading based on your own comfort level, and maybe after having talked to a financial advisor. But starting with paper trading is a great idea. And yeah, I really encourage that with the back tester.
Great. So Dharmesh says, this is a paranoid question. I don't ever want to cancel my subscription, but let's say my credit card expires, etc. Yes, we're very understanding when that sort of thing happens. So if it's an unintentional cancel, then we won't lock you out. But if you write and say you want to cancel, that's the only time that we kind of enforce the pricing structure.
Yeah, exactly.
Do you plan to add fundamental data like earnings growth? Yes, very possible. It really comes down to our users, but we actually have a pretty storied history in the fundamental data and fundamental data analysis area. So it's not at the top of the list, but it's certainly possible. Just some positive feedback. Have tried many services, and this is by far the best service I have seen so far from Brian. Thanks, Brian.
Thank you,
Love
Brian.
to hear it.
Yep.
Can you use the model to determine a hedge for a longer-term equity ETF portfolio?
Yeah, for sure you can. So what I didn't show is that there's something called custom strategies. So you can take an out-of-the-box strategy, call, a put, covered call, blah, blah, blah. But you can actually create a custom strategy. And so in that custom strategy, you can create your own, and you can add up to 4 option legs or a stock leg. And in that, what you can do, obviously hedging a portfolio is buying insurance. And generally, we want buying insurance to lose money. We just want it to lose the least amount of money as possible and to still protect us. So you can put in your ETF, so you would say here, I'll just do it for you. So let's just pretend I had 1,000 shares of stock. and I wanted to buy a put, and it's really far out of the money put every, I don't know, let's say every 6 months. And since I have 1,000 shares of stocks, I'd want 10 puts. I'd add it. And then I can give this a name like, this is actually a married put, so I'll just call it a married put. Okay, and then you save it. And then you've got a married put. Then you would put the ETF that you had in mind. Let's see, the SPY. And you would do the married put strategy. And unbelievably, a married put has worked. Let's make sure I did that right. Longer put. Yeah. Oh, of course it has. Right. Owning the SPY, yet having insurance has been a winner. Of course it has. The SPY has gone up. The real question is, how much did your insurance cost you? So you would you could take out the married put and see it. But to learn how to do custom strategies, there's a little learn more link here. And we show you how to make custom strategies. And so that was a very long way of saying, yes, you can absolutely test how hedging a portfolio would have worked. This is a great example of SPY over the last 3 years using, what was I using? Using 6-month options. So yes, certainly you can.
Cool. So Ricky says, would you give 2 trades based on your tool to follow for the next 2 weeks before you decide to subscribe? Our policy is, first of all, we don't make recommendations. There's trades that the tool surfaces that we get excited about that we may trade ourselves, but we don't, we never make a recommendation for what you should trade. Talk to a financial advisor about that. Just in general, as Ophir mentioned before, if you log on for 2 weeks and you don't love the tool, just tell us and we'll refund you. So there's no need to have the extra step. You can just get the full-blown version. How do you, or can you do calendar spreads? Yes, you certainly can. That's in the custom strategies. Ophir can just show you real quick the basics.
I'll do a calendar spread, call it Cali. I'll buy a 50 delta call that's 30 days out 10 times, and I will sell a 20 delta call that is weekly. I want the weekly option to keep rolling, so I uncheck this position. This is a call Cali. And there it is. So doing a call calendar, this is a big back test. Doing a call calendar in the SPY the last 3 years has returned 102% and has won 72% of the time. That's a great question. It's also just yet more evidence. Guys, if you want to trade like the professionals, you need computing power. They're not doing anything by hand, I assure you. Okay. I was a market maker on NYSE ARCA, on SIBO. I was a hedge fund manager. I built models for GMI, which is now owned by MSCI, which is an incubator from Morgan Stanley, which they managed over $1 trillion with those assets. I'm going to say a trillion with a T, so 1,000 billion. They're not doing it by hand. They're just not. Okay. It doesn't mean you have to subscribe to us. I'm just letting you know, find something where you're not doing it by hand. You need the power of computations in order to trade with everyone else. At least with the institutions. Otherwise, the top 99.9% are going to keep taking retail's money, and I absolutely hate that. That's my one life's mission, to stop that from happening.
Cool. Yeah, I was going to ask you to show that one more time. A few more questions coming up. Kenneth says, off topic, but would appreciate your personal opinions of technical analysis in general.
Yeah, my personal opinion on technical analysis in general is exactly as I presented it in the trade machine. If we can back test it, if we can have a hypothetical, first of all, before you test anything, you have to have a reason to believe something will work. And so the bull and bear squeeze, there's a reason why it should work. Doesn't mean it will work, but there's a reason. There's a rationale. Once you have a rationale for an hypothesis, you test it. You test it empirically, you test it explicitly. You don't test it based on, that guy that did that trade that time, right? And so we're going to have a technical back tester. We're going to have a stock back tester. It will be a separate product from Trade Machine, we think. And then you'll be able to test the technicals. We'll do a lot of the work for you and show you which ones work and why they work and what the hypothesis is behind them. So broadly speaking, I think technical analysis, like everything else, like many other things, has been overused, and some people think they have signal and they don't. But I think some people who think they have signal do have signal, and they're exceptionally good at it. And if you want to know who I think does that, just look at who I follow on Twitter. So yeah, technical analysis can work, and it also can lead you astray. Again, it's the power of having computation and behind you that will help you determine what does work and doesn't work. Also, don't forget the first part. There has to be like a hypothetical reason. There has to be a hypothesis behind something for it to work. So for example, if your technical analysis is, if it's above 50 degrees in Los Angeles, should I get long? That's not really technical analysis. That's just, that would be a spurious regression. And of course it would work because it's always over 50 degrees in Los Angeles and the market always goes up, right?
Absolutely. So gentleman asks, can we use the research with the trading platforms as well? So that question seems a little unclear, but you can certainly, I mean, this doesn't directly link to a trading platform right now. The way that I personally do it is I'll oftentimes put an alert in my calendar when I find a trade that I like. And there's a good chance that we will be introducing alerts directly. So you can say, hey, this particular swing earnings trade looks really exciting. Can you just notify me 7 days before earnings so that I know to put on the trade? So that's the sort of way that will make it easier for you. And then we have someone asking if we mind going over the call calendar again. Well, that's all going to be the video, so you'll see it in the email, and you can play that slow and rewind it and go over it as many times as you like.
Yeah, I just want to add one thing to the prior question. I just want to make it explicitly clear, and I don't think I've done that. The trade machine has a name, trade machine. There's no trading through this platform. You're not depositing assets with us. We are not a broker dealer. I hope that's perfectly clear. We are a software to help you identify patterns that are patterns that repeat. All of your trading is done through your brokerage. So we are not a brokerage. You do not trade through us. You can trade through whichever broker you want. If you have an opinion about a broker and you want to share it with us, feel free to. But we do not execute trades, right? So you would do this, find a trade you like, go to your broker, and either paper trade it or trade it in real time. Just to be really, really clear.
Yeah, and this is, I mean, the whole approach we're taking is we're finding things that have patterns that last, that there's a repeatable process. We're using end-of-day data, and so it's not the sensitivity. We're not doing high-frequency intraday trading. So this kind of fits well with the approach that we've taken to doing the backtesting.
Yep, exactly.
Okay, well, it looks like the questions have wrapped up for the moment. So thanks everyone very much for attending. Just as a reminder, this will probably stay up for about another 48 hours. So jump on it if you are excited to try it out. Brian asks, why just the 3-year back test? What will it be in the future? So Ophir can show you a little more about that.
Yeah, first thing Brian asked, I think, was cost, and it's $69 a month. Normally it's $99 a month. Right now it's $69 a month. Soon it will be $129 a month. Oh, cost. Why just 3 years? Got it.
Yes.
Okay, got it. So okay, I'm going to give you my personal opinion on periodicity for options trading, and you can agree with me or you can just think I'm wrong. It's fine. I'm just giving my opinion. I believe option trading is volatility trading, whether you mean it to be or not. So if you don't know that you're volatility trading, that doesn't mean you aren't. You are. Every time you touch an option, you're trading volatility. You're getting long or short volatility. Volatility tends to move in cycles. Those cycles tend to be 2 years-ish. We've had a very long volatility cycle right now. Those of you, kind of read the headlines that we're in a low volatility place. It's been about 28 months, something like that. Generally, it's not more than 3 years, and so that's what we think is relevant. Having said that, here's the trick that everyone can know if you're watching this webinar. While our buttons only go to 3 years, if you go into settings, you can actually go back to 5 years, right? Just do it by hand. Go back to 2012. So we actually have 5 years of data. And so you can feel free to do that. We have more data. I just don't think it's relevant, and so I don't want to lead people astray. Yeah, so I think that's probably my best answer for that.
Yeah. And the custom strategies, because they roll at different times, take a little longer, and that's with a little more data. Is there a plan to add a 10-year history? We'd like to see the results of a bear market or see results of 2-year spreads. So ultimately, this will be governed by our users. So it'll be a feature like any other. If people are saying what they care about is having more trading history, then that's certainly something we can do.
Mm-hmm. I caution you again, though. Remember that I suppose doing 2-year options trades is that's a thing. That's a leap. But remember that in general, when you're trading options, long-term would be like 90 days. Short-term would be something like the 3-day swing trade. So what we're really looking at now is let's say you're making a bullish momentum bet. The question we should not ask is the bull market going to keep going for the next 6 months? The question is the bull market going to keep going for the next 6 days? Right. And so that's the sort of appropriate way to look at backtesting. We're looking at periodicity. We're looking at moments in time and patterns that have repeated. And trust me, when we go into a correction or a bear market, as those of you who are members know, we talk about that all the time. And in fact, that's exactly what I'm talking about with NVIDIA. And that's exactly what I talked about with Google. When the market turns over, these trades, first of all, these trades are working in a bull market. They're going to work likely or possibly going to work even better in a bear market. So we're not just buying calls and saying, hey, it's a bull market. No, we're showing some of that, but we're also showing how to hedge a portfolio, which is what I discussed earlier in the webinar. If you're long, if you're owning calls in one strategy, then you should probably have another strategy that's non-directional. Don't blow yourself up because the market decides to take 2 weeks off, right? That's not our intention at all.
Kenneth says, I'm currently a subscriber and love it. However, has anyone written a good book that reflects your general option philosophies?
That's funny, Kenneth. Someone actually probably is. So I'm not going to say that if someone has already written 4 market books and they're going to write their 5th. I don't want to say who it is because they think they want to work with us, but they're not sure. And so I don't want to name a name and all of a sudden we are associated with a famous author and then we're not. But it's a really good question and someone has picked up on it. And in fact, here's a plug for StockTwits and Stocktoberfest. We met him at Stocktoberfest and that's what he wanted to talk about. So right now, no, it seems like in the near future, yes. And I was even given the privilege to write the foreword for the book. So if that happens, that would be one of the great privileges of my professional career. So it's quite possible that that's coming out. By the way, by the time that happens, Trade Machine's probably going to be $299 a month. So.
Brian asks, if you post an idea on Twitter, are you using this tool, your experience, or something else?
Yeah. So first of all, every time I do anything, I'm using my experience. We can't remove a part of our cognition. It's actually one of the most frustrating things about being a human being. So for example, if you speak in English, try to look at letters and not read them. So I'm always using my experience, whether I'm trying to or not. What I post on Twitter is both. So when I'm doing a back test, I'm very explicit in what I'm posting on Twitter. I'm saying, hey, look how this has worked. Let's say Boeing or NVIDIA or Google. I talk about it. When I'm doing some of my shorter term trades, no, that's not, the back tester doesn't do intraday trades, that's experience. So I'm sort of a mix of academia and practitioner, and in the market making world, sometimes I'm in a position for 5 seconds. So I don't trade every 5 seconds, but the intraday stuff is guttural and experiential. And the longer term trades, I just don't ever do a longer term trade unless it's basically backed up by pattern recognition in the back tester. So I would say both.
Via chat, we have someone ask, do you provide broker services as well? And as Afir mentioned before, no, we do not trade through the tool, but it is good to know that we are starting to set up partnerships to do what's called soft dollar accounts. And so what that means is if you trade with a broker and you trade a lot, they'll actually give you credit towards tools that help you trade. And so we've had people set up soft dollar accounts so that essentially they pay us ahead of time. They pay us like 3 years of service through their brokerage, and then they get the tool for free. So if you do have a pretty good sized account and do a lot of trading through a brokerage, then you might want to look into that.
Yeah. So the lottos, Brian, are guttural. Yeah, that's based on kind of chart reading, tea leaf reading, hope.
Do you have any future plans for intraday backtesting? It's not currently our focus. Not ruling it out. It's actually not a request that we get very often. So not unless it becomes all of a sudden if our users are just crying for it, then we could certainly think about it.
Right. When the stock backtester comes, though, there will be some intraday data, but that's a totally separate product, just to be clear.
Yeah. Okay, so we'll leave this up for a little while longer. Looks like we've gone through most of the questions. Last question. When do we think that the Bitcoin ETFs will come out? And will you provide backtest results for this?
So I don't know when the Bitcoin BTF is going to BTF or the Bitcoin ETF is going to come out, but I assure you we will provide backtests for it. What we're going to do is take historical Bitcoin prices, take the current level of volatility, and allow you to run backtests on up to, I don't know, 3 or 4 years of data, depending on what Bitcoin used to be sub $1, so it's not very useful. But yeah, when Bitcoin options come out, we're going to get them in the backtester, and we're probably going to be the only place on earth that allows you to look for patterned Bitcoin patterns.
Yep. Great. Thanks everyone so much for attending. That's the link. Go check us out if you're interested, and if you love it, then tell your friends.
Cool. All right. Thanks everybody. It's been a pleasure. See you guys on Twitter. Bye.
Bye guys.